Well, everybody, welcome to Thursday. The S&P 500 had a great day today. It was up 1.2%. We saw lots of green on the board, lots of things that were up. Really, really good day altogether. Makes up a little bit for some of the things that have been happening, Monday, Tuesday, and Wednesday here. I don't think we're out of the woods in terms of dealing with this inflationary pressure. Matter of fact, I would assume it's going to get worse. But again, the thing that the market seems to be locking in on now is just that a lot of the systemic inflation pieces like rents and healthcare costs and those types of things actually came in pretty good yesterday with yesterday's report. And a lot of the things that are going up are related, of course, to the pandemic and what's happening, and theoretically could be a temporary situation that works its way out here, relatively soon. The stock market is a forward-looking mechanism, and so if inflation is really hot right now, obviously there's a chance that it could be lower coming forward. That's the big debate. Is this a temporary inflationary situation or is some of this going to be permanent? It is interesting to me when you look at kind of labor cost. If restaurants or something have to increase the cost, the price that they're paying in order to attract people in, how do you get that to go back down, right? So there are some pieces here that'll be kind of interesting as far as that goes. We'll see how this plays out. But generally speaking, an inflationary environment means that you have a situation where the economy is doing really well, which is kind of what's happening now, and you're looking at a scenario where employment is getting better, and there's more money floating around, and companies make more profits, which ultimately is the key driver. Again, deflation is really bad. Inflation is not great if it's really high, but it's better than that. And I'd probably take too high of inflation over any form of deflation as far as that goes, where prices are dropping, which may seem like a good thing as a consumer, but from a business standpoint, it's kind of a nightmare. So that's one of the things that we're going to see going forward here is just this dramatic reopening is going to continue. I don't see this pulling back. But the other part that I talked about yesterday was that the fact that the U.S. is quite a bit ahead of a lot of different countries in terms of the vaccine. We're ahead in the reopening aspect of it. If you look at the mobility data for how much U.S. People are moving around, it's at negative 17%. It was at negative 20 not that long ago, which just means that there's 17% less movement happening here in the U.S. amongst individuals as compared to February of last year, kind of before the pandemic started. And if you look at the world, actually, we're doing a bit better in that also. India's now at negative 52%, because of their issues. Ireland's at negative 47%, et cetera. So you're not seeing a full reopening impact into the globe. All right. It's happening here. It's happening in different places. And that will slow down inflation. As a matter of fact, what we saw today was that the 10-year Treasury yield, which had been going up and up and up, actually went down today. And again, once it gets to a certain price, everybody around the world says, hey, I'll take it. If it's at 1.7%, it's the U.S. government backed, dollar backed, 10-year Treasury, and my country is paying 0.1%, like in Japan or what have you, there's a demand for that. So that kind of keeps that lid on that. And that's, I think we saw a really good market today, partly because of buying that came into, the Treasury market, because it got up to a point where people were willing to pay and willing to buy. And so again, and that has a lot to do with this kind of global resurgence. And so I think we're quite a ways away from the globe to having this type of really high inflationary situation coming, just because, again, the vaccine delivery is not happening nearly as well in a lot of the different countries as it is here in the U.S., for example. So very interesting to see how this will play out as far as that goes. But we're in the right place. If you look today, the growth stocks did okay. Some of them did poorly. The ARK investments that I've been talking about did poorly today. Clean energy did poorly today. Even in an up day, they're not doing well. The value type things that we've been investing in, some of them did really, the regional banking piece that we had today was up 3.8%. Transportation was up. Consumer discretionary was up. The reopening pieces were up a lot. In our traditional model, we have 15 pieces in there that are the stock market. 12 of them did better than the S&P 500 today. So that's what's kind of going on as far as that goes. We're in the right spot. You can see it when the market comes back around. We're seeing a continued rotation into this reopening area and a continuing rotation away from kind of the other areas that were doing last year really well. Interestingly enough, cryptocurrencies didn't do well today. So I'm going to be very fascinated to see what type of relationship we have. We have a very strong relationship between bond yields and the stock market. That's very well defined. But what type of relationship do we have between cryptocurrencies going up or down and the overall stock market? I don't see it yet. It's still too early, but there may be some relationship there. And again, today cryptocurrencies down, stock market up. We'll see what happens, kind of going forward. But really interesting day, and I look forward to seeing you tomorrow. We are having Go Live with Tom tomorrow at 12:15 to 1 o'clock Pacific time. You just go to golivewithtom.com. You can type in questions and just ask, and you can, if you don't have one, you can listen to some of the others. They've been really fun, so if you get a chance, feel free to join us. And otherwise, we'll see you on tomorrow at Go Live with Tom be next. And again, we'll do another video for the market update tomorrow also. So look forward to talking to you then. Thank you very much.